Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, December the 26th. And first of all, let me say Merry Christmas. Hope you guys are having a very wonderful holiday season here. And if you didn't see the market, we got our Santa rally finally. Let me expand this out a little bit to put this in context. So I know you guys probably saw on Monday. Matter of fact, let me do this 2-day chart. So on Monday, Christmas Eve, we had a half day trading. This was Monday. And this, with the Dow, we went down 600 and I think 53 points or something like that in the Dow. This was the worst Christmas Eve trading day on record ever. And then we came in this morning, we're going lower, and we bounced off this low here. Amazing rally here today. The S&P was up 100 and I think 21 points off that low. The ES up 130, something like that. Basically, the S&P, and let me show you. It's easier for me to show you this. It's pretty impressive. This is the Dow. You can see right there we're up 5.43%, 5% in a day on the Dow. We've got the ES up 5.42% today, and the Nasdaq up 6.58 today. And then this is the biggie, crude oil up 9.59% today. Crazy move higher all the way across the board. In fact, this is the biggest gain, the biggest single day gain that we've had since 2009 financial crisis. Again, the Dow itself up over 1,000 points, almost 1,100 points on the day. Crazy rally. So the question is, and let me go back to a one-day chart. So the question is, is this the Santa rally that we've all been waiting on? And absolutely it is. This was pure and simple short covering 101. If we go here to the to my multi-time frame indicator, and we'll do a one day here. You can see from the morning, we really never backed off all day long, but you see the green dots are multi-time frames all going positive at the same time, and then here at the end of the day we just went all positive, everything, all time frames for the most part. These are super short time frames here, but again, it never really let off at all today. So again, let's look. I'll show you the see if I can zoom out here. So we got a 1400 tick reading. This was, I don't know, somewhere up here. But all day long, you can see the ticks were just, here's zero. There's zero. So we were positive all day, and we just kept trending higher and higher. Not sure what that flush is right there, because we really didn't have any kind of down draft in the market. But a 1400 tick reading is very powerful momentum to the upside, right? So again, we just full court press all the way up today, never really backed off this low we had here. And this morning I was looking at this low, we gapped at the open, started kind of rolling over here, and I thought, oh man, this is going to turn into another one of these days where we just kind of roll over and continue lower, especially after Monday. We just had that Monday, right? So then we immediately off this low get a bounce, and there were some tweets and things out there in the news that were helping, but the vast majority of it was short covering. And what happens, the short covering causes more short covering as higher and higher levels are hit. And as you can see, I've got voodoo lines up here, and we just took out these levels one after another, and here's our final level of snow line that we came up into. So the bigger question is what happens tomorrow. And without some kind of bad news, I feel very comfortable that we will continue, higher tomorrow. Whenever you go out, especially on a strong up day, and you go out on a high, you tend to get follow through the next day and probably the next several days. So we are right here on December 26th. We should get follow through, Thursday, probably Friday. I wouldn't even be surprised if we got follow through all the way up into New Year's Eve here on the 31st. So in looking at that, let's back this thing out a little bit. And I'm just talking about the S&P, but all of the, all the markets are relatively the same as far as how they are performing. Our expected move to the end of the year, to the close on December 31st, is about, at this point, it's about 71 points. And that puts us to about 25.38, if my math is correct. Yeah, about 25.40, something like that, 25.40, which we happen to have a snow line here, and I'm not sure that we don't get, we had again 120 points today in the S&P. If we get momentum behind that short covering, I don't think I'm crazy thinking that we could get to 2,600. That's about 130 points, I believe. But that's probably not without reach. I don't think, nothing like this. But again, if we look at this, let's come back down here to a smaller time frame. So I'm thinking 25.40 there, and if we stretch, we might get 2,600. The reason I say 2,600, it's a big round number. 2,500, 2,600, 2,700. Those tend to be big magnets, especially at the end of the year. We have all of the portfolio managers that are scrambling, trying to rearrange their portfolio so that when they have to show the holdings in the prospectus to shareholders and all that kind of stuff, that they have the right, quote unquote, right stocks in the portfolio. And two, they're still trying to squeak out, profit at the end of the year. So it would not surprise me if they drive this thing higher. So, what do you do? Well, if you're not long yet, which most of us are, I'm very heavy in cash right now and just kind of watching this, but that's okay. This back and forth action will give you, make you seasick. So at this point, I'm not inclined to chase this, maybe on a day trade, and trying to scalp and things like that, but I'm more in line of trying to kind of get set up for first quarter next year. And it's, again, with the way things are, this, unfortunately, when we reach that Santa rally high, unfortunately, it probably will be sold into. Still too early to tell, but I think we may give some or all of this back in January. I don't know yet. It's still too early to tell. So therefore, I'm going to continue to stay in cash, or a lot of cash, and I'll be selective. I'd love to do some bottom fishing here. Some things look really cheap, but I'm going to, as we're only a couple, 2 or 3 days away, I'm going to not try to chase this as we go higher. I'm going to stick, for the most part, in cash and just be very selective. So that is what I've got for you today. Hope this helps. Hope you have some in the market if you are long, and if not, be very, very careful. This thing can turn on a dime at any time. So be careful out there. So thanks for the time, and I'll see you at the next update.
Hey everybody, this is John, and I just want to do kind of a couple of quick things here to add on to this. And it's so well, I'm going to show you too exactly what this looks like from 2008 as well. I mean, this is doing exactly what happened in 2008. So we had 7 big days down, high volume, lots of. I was talking to a couple brokers today where a lot of their clients were getting flushed out on margin calls, and even some of them today were hoping for a rally. I mean, it's just a flush, right? And of course, over the weekend, all the financial press came out. It's depression. It's coming up now. Implosion and yada yada yada. And of course, if the markets were trading right here with the same news that's coming on, they'd be saying, "Oh, things are fine," right? So remember, first price, then news. So a couple things to keep in mind for today. So first of all, when you're trading a down market, okay, you cover shorts. And I talked about this in the webinar last week on how to trade a down market like this. I'm going to do another free webinar on this on Thursday, and I'll give you details on that. But you got to sell into that momentum, because we're always going to come back and test that 8 EMA. And if you get too far from it, then your risk is actually to the upside. And so today, what was fascinating about this is that we had the markets kind of open, and initially you had that little bit of, we gapped up, and then we had that little bit of selling, kind of suck everybody in short, and then ripped it up, and then the decline here was actually really small, much smaller than usual. And it was interesting also just being in the room, because you've got, I know a lot of people in there have made money on the downside, which is fantastic, but it's also just kind of looking at every day is going to be a little bit different, right? And it's not, the argument is not about are you super bearish or are you super bullish. It's what is the highest probability move over the next day or two, right? And so this morning we had the little kind of a gap up here, and we started to sell off, shorts start piling in, then it's like we come up and make new highs, and we're consolidating, and then just the, that is kind of that classic move. And so what I wanted to show you here real quick is the comparison here in 2008. All right, so this is 2008. For those of you that weren't trading then, this market is very, very similar to that. And this move right here is pretty much exactly what we're experiencing right now. And you can see here that we got too far, it was about 7 days down. We got too far away from the 8 EMA. And we had 3 days where the market rallied 250 ES points. Now keep in mind, okay, this is not when the S&Ps were trading at 2,500. This, on a percentage basis, much more significant. Okay, this is when we're trading like at 800. So if you think of this in terms of percentages, so you can think of it in percentages, or just think of it in terms of a moving average. But when you have panics like this, the markets always move the same. So you got the big short covering rally, and then the next day we tried for the 21 and failed. And then you can see what happened is the next couple of days were brutal. So you had a big down move, big up move, big down move, huge up move, big down move, up move, back to the 8 EMA, and then we finally crushed it. Okay, so what you want to look for now is, and then of course this is March 2009 where we actually put in a hard bottom, and you got to look at this because this is what a hard bottom looks like. You get the, and again it's the, it's kind of the W kind of a shaped bottom here, reverse head and shoulders, all that stuff. But if you look at what happened here is you got the 8 cross the 21 and then the 8 cross the 34. Okay, so here you could still short, okay, gosh, it's still going, but when it crosses that, it's done, and you're starting to working your way higher. So now, if we come back here and we look at where we are right now, okay, and go back to a daily chart, you can see that, we're certainly not anywhere near that. The 8 isn't crossing the 21 anytime soon, but we could certainly get it back up to the 21, okay? So just keep in mind all of that fun stuff. And if you go, I think collectively the FANG stocks added $250 billion of market cap today. Amazon made it back to the 8. Google was showing a lot of strength early on, kind of made it up to the 21. Apple here just made it to the 8. Microsoft to the 8. Netflix to the 8. Facebook a little bit through the 8. So Google showing the best kind of strength there. All right, and then there's a couple of oil stocks I want to show you guys too. Well, here, hold on just a second. So tomorrow, Thursday, I'm going to do a free webinar. It's just called The Road Ahead in 2019. If you go to simplertrading.com/New Year. And this isn't for a class or anything like that. This is literally just look, this is what's going on behind the scenes so you guys know. I'm also, as a bonus, I'm going to show you a oil-based fund right now that's yielding 12%, okay, that I'm buying right now. And then also two more oil stocks that you haven't heard of before that a couple of billionaires are starting to buy. All right, so a couple things there. So there is some real opportunities in this market right now. In addition, I'm going to cover the real motivation behind the Fed's controversial strategy. All right, and why global money managers are screwed. What killed the Santa Claus rally? What these forces mean in 2019. How to target 1K a week like clockwork, even in a volatile market like this. How to trade a down market. How hedge funds are playing the Powell put. We talked about this last week, and I said that the Powell put was at 2,400. Well, guess what? We got down to about 2,350-ish on the SPX, and look where we ended up today. Okay, that stuff's real. What shifts in the macro money flows mean for real estate, gold, oil, and stocks, and really just kind of getting prepared for next year and being able to take advantage of everything that the market is doing right now. So not only knowing how to trade it, but understanding what's coming down the pipeline so you can be prepared and you can react for it. All right. This is one of those times where you cannot be a deer in a headlight. You'll get killed. You can trade this stuff, but you cannot be married to your convictions. You've got to look at that price stuff, but you've got to understand what's happening behind the scenes as well. All right? So we'll be talking about this tomorrow night, 7 o'clock Central. Just put your name and email address, and we'll get you set up. All right? Have a good one, and see you tomorrow night.